So if this is not an expenses for this company, then it should be added back. I will work out later. For the before working out, you should always, you have to think what nature of item it is and what will be the impact in accounts. Okay, what is the nature of item it is and what will be the impact in accounts. What is the next item? Bonus utilized in reduction of life insurance premium. Just tell me, bonus is an expenses or income for the company? Bonus utilized in reduction of life insurance premium. What is the meaning? Premium is an income or expenses? Premium is an income for the insurance company. Bonus is an income or expenses to the company? Bonus is an expenses to the company. So what they are trying to say? Instead of paying separately, the bonus they are reducing from the life insurance premium collectible from the policy holder. 4,500 is the expenses to the company. Okay, we will see what to do. It is an expenses. For the time being, it is an expenses. What is the next item? Interest accrued on securities. It is an other income. It is an income to the company. What is the next item? Outstanding premium. What is premium? First of all, premium is an income or expenses? It is an income. Outstanding premium means yet to be collected. Correct? Yet to be collected. So it is an income. What is the next item? Claims intimated but not admitted. Claims intimated but not admitted. For the time being, you forgot about claims. You just remember the word alone, claims. I will explain what is this intimated but not admitted in the subsequent problem. In the subsequent problem, I will explain you. Thereafter, you will understand what is the exact meaning of this one. So, for the time being, you assume only claims. What is the meaning of claims? Claims is an expenses or income? Claims is an expenses or income? It is an expenses. So, accordingly, we have to account. Now, we will work out the problem. So, opening balance. What is the opening balance of fund? 62 lakhs 21,310. Correct? Then add whatever related to income. And minus whatever related to expenses. Okay? So what is related to income? What is the first item? As per the question? Claims covered under reinsurance. Is an expenses or income? It is not income, but it is not expenses also. Meaning, it is an expenses belongs to some other person. This claim is not belongs to my company. This is belongs to another company's claim, because it is already reinsured. So I am assuming this 12,000 is already debited. This 12,000 is already reduced from my account. I have to give some effect for this. Okay. So the point is, I'll explain that. Come to the fifth point in the question. What is the total claim? Intimated? Claim intimated but not admitted, how much? 26,500. Assume this is claims. I will explain exactly what is claims intimated but not admitted in coming problem. Assume this is claims. Claims means expenses or income? Claims means expenses only, correct? So I have to reduce from my fund. This is 62,21,310 is my fund, total fund available. It is like a reserve. My resource is this much. So out of that claims 26,500. Correct? It is an expenses to the company. Correct? Claims outstanding minus claims covered under reinsurance. 12,000. Why I am minusing? My total claims is 26,500, out of which 12,000 claims which is not belongs to my company, which is belongs to some other company, because it is already reinsured. Reinsured means risk is transferred to some other company. So 26,500 minus 12,000, I'll get 14,500. This is my net expenses. This is my net claims. Okay. So come to the second item. No. So now the fifth item and the first item is over. Come to the second item. Bonus utilized in reduction of life insurance premium. What is bonus? Bonus is an income or expenses? It is an expenses. Okay. So bonus, I have to reduce. Bonus, I have to reduce from my fund because it is an expenses to me. I have to pay this amount to customer. So expenses. What is the next item in the question? Third item, interest accrued on securities. It is an income, other income. It is another income. So interest on securities is another income. So it will increase my fund balance. It will increase my reserve amount 8260. It will increase my reserve amount. What is the next item? Fourth item, outstanding premium. Premium is an income or expenses? Premium is an expenses or income? It is an income. So it will increase my fund balance. Outstanding premium, how much? 5410. So add to income, I'll get 13,670. So if you add these two things, it is my expenses, 19,000 expenses. Closing fund how much? 62,21,310 plus 13,670 minus 19,000 equal to 62 15 980. Okay, 15980. 62 15980. Opening 62 21,310. Opening balance, interest on securities income, outstanding premium is an income. So total income. Then claims outstanding is my expenses. Total expenses is 26,500. Total claims is 26,500. Out of which 12,000 claims is not belongs to my company expenses. It is belongs to some other company because I reinsured it. So total claims minus reinsured claim equal to net 14,500 is my net claims belongs to my company. Then bonus I am going to pay to my policy holder. That is my expenses. 4,500. Add to this to 19,000 and you will get. So accordingly you will get the closing balance. Okay. We'll go to the next problem now. So the next thing is valuation balance sheet. So valuation balance sheet in the sense the balance in the life assurance fund cannot be taken as a profit made by the life insurance business. As I said, the life assurance fund is accumulation of profit. Life assurance fund is an accumulation of profit, past profits actually. The point is whatever the fund available, that is not an profit. As per them it is not a profit because as I said insurance business is totally different from other business because liability is recurring in nature and it depends on the policy also. Some policies so as I said liability is unforeseen or you can say whatever the fund life assurance fund is not a profit for the insurance company because they have a liability in a different sector or different stages. They have a liability, they have to pay, they have to settle the policy holders because the nature of insurance business is totally different from other business. Okay, so what they are trying to say here, the balance in the life assurance fund cannot be taken as the profit made by the life insurance business. For the purpose of ascertaining the profit, the insurance company should calculate its net liability on all outstanding policies. This calculation done by expert called actuaries, and is highly complicated mathematical process. So it is done by whom? Actuaries. It is like a professional course. It is a separate profession, mathematics oriented profession. They will calculate the net liability. We will understand what is that net liability, how to calculate. Okay. Prior to nationalization, insurance company were having this computation once in 3 years. So every 3 years they have to calculate this net liability for identifying the profit. Since nationalization, LIC is having such valuation once in every 2 years. That's what I said above. It is once in every 2 years they have to calculate the net liability. For calculation net liability, the actuaries calculate the present value of future liability of all the policies in force, as well as present value of future premium to be received on all policy in force. The excess of present value of future liability over the present value of future premium is called net liability. What they are trying to say, what is your present value? Present value we already discussed in classroom itself. What is the total premium receivable? What is the total premium receivable? And what is the total liability payable? You got it or not? What is the total premium receivable minus premium receivable is an income, and liability, it's a claim actually. What they are trying to say is claim. Future liability of all the policies in force. So future premium minus future liability equal to your net liability. Okay, net liability or something like that. So that is the understanding. So for calculating the net liability, the actuaries calculate the present value of future liability on all the force, in all the policies in force, as well as the present value of future premium to be received on policies in force. Okay, the excess of present value of future liability, excess of present value of future liability over the present value of future premium is called net liability. Okay, that's what they are trying to say. So my all liability, future liability minus all future premium equal to all future liability minus all future premium equal to excess. In that excess is your net liability. Okay, net liability equal to present value of future liability minus present value of future premium. Okay, theoretically maybe you feel little bit difficult to understand, but it is very simple. It is very simple. While solving the problem, it is very simple. You'll understand that. What is the next para? It is by comparing the life assurance fund and net liability in respect of policies that profit in respect of life insurance business can be ascertained. If the life insurance fund is more than the net liability, the difference represent the profit. If I have if my life insurance fund is more than my liability, means then I have a profit. On the other hand, if I have more liability compared to my fund, means then there is a loss. That's what they are trying to say here. Go through. If the life insurance fund is more than the net liability, the difference represent the profit. My investment is more than my liability. My asset is more than liability, means then it is a profit. On the other hand, the excess of net liability over the life insurance fund represents the loss for the intervaluation period. If my liability is more than my asset, then it is a loss. That's what they are trying to say. According to section 28 of life insurance covenant, 90% of the profit of the business must be distributed to the policyholder by way of bonus on with the profit policy, and the remaining 5% has to be utilized for such purpose as government may determine. What they are trying to say, 95% of the present year profit should be transferred to policyholders or distributed by way of bonus also. Okay, remaining 5% to be utilized for such purpose as determined by the government. We'll go to the problem. You'll understand the problem easily. So why I am discussing the theory also, because you may expect short notes or 1 mark also. What is the format? Valuation balance sheet. Opening balance, life assurance fund as per balance sheet, net liability as per actuarial valuation. This is asset, this is liability. If asset is more, then it is a profit. If liability is more, then there will be a loss. So we have to calculate life assurance fund, net liability, then difference will be profit or loss. This is the format, please remember. You can expect 4 to 6 marks problem. You can expect 4 to 6 mark problems. What is the first one? Life insurance fund of Prakash Insurance Company was 34 lakhs as on 31st March 2019. It is actual valuation disclosed net liability 28 lakh 80,000. Interim bonus 40,000 was paid to the policy holders during the previous 2 years. It is now proposed to carry forward 1 lakh 10,000 and to divide balance between policy holder and shareholders. Show valuation balance sheet, net profit for the 2-year period, distribution of profit. First they are asking valuation balance sheet. Valuation balance sheet, this is the format. Right, fund asset this side, investment, that is life assurance fund this side, net liability this side, difference is your profit or loss. This is normally for 2 years. Valuation balance sheet is calculated for how many years? Once in every 2 years. That is as per LIC rules and regulation. So this thing is for 2 years, once in 2 years. Within this 2 years, they paid interim bonus. They paid interim bonus of 40,000 already to policy holder, and they decided to transfer 1 lakh 10,000 to reserve account. They decided to transfer 1 lakh 10,000 to reserve account. Balance they are going to share between policy holder and shareholders. Policy holder and shareholder. Policy holder how many percentage? 95%. Balance 5% is for shareholders. That is rule actually. Profit should be transferred, distributed as a bonus to policyholder 95%, and balance should be transferred to shareholders. This is the basic understanding. First we have to solve the valuation balance sheet. We will work out now. So I am explaining. So life assurance fund 34 lakhs, net liability 28 lakh 80,000. 28 lakh 80,000 is your net liability as per the question. Difference is your surplus 5 lakh 20,000. Difference is your surplus 5 lakh 20,000. So that is my profit surplus as per valuation balance sheet. I have to calculate valuation balance sheet as per the format. What is the next one? Net profit for the 2 years. Net profit for the 2 years. I have to calculate profit as per valuation balance sheet 5 lakh 20,000. Profit as per valuation balance sheet 5 lakh 20,000. I arrived from here. And interim bonus I already paid to policy holders 40,000. Bonus is paid out of profits already paid in past 2 years 40,000. That I have to add 5 lakh 20,000 plus 40,000 equal to 5 lakh 60,000 is my net profit. Exact net profit is 5 lakh 60,000 as per the question. As per the question 1 lakh 10,000 I have to transfer to reserve account. 1 lakh 10,000 I have to transfer to carry forward to P&L account or reserve account. So out of total profit I am transferring 1 lakh 10,000. So balance profit available is 4 lakh 50,000. 5 lakh 60 minus 1 lakh 10,000 equal to 4 lakh 50,000. That is my balance profit. This profit is available to policy holder and shareholder. As per rules and regulation, 95% policy holder should be 95% should be paid to policy holder. Balance 5% should be paid to shareholder. So 4 lakh 50,000 into 95% equal to 4 lakh 27,500. 4 lakh 50,000 into 95% equal to 4 lakh 27,500. This amount is available to policy holder. This amount is available to policy holder. Out of this 4 lakh 27,500, we already paid 40,000 to policy holder as an interim bonus. We already paid 40,000 to policy holder as an interim bonus. I am deducting 4 lakh 20,500 minus 40,000 equal to 3,87,500 balance available to policyholders. 3,87,500 balance available to policyholder for distribution. Then what about shareholder? So as per rule, 95% is for policyholder, 5% is for shareholder. So balance 5%, 4,50,000 into 5%, 22,500. That is available to shareholder. So with this problem is over. We'll go to the next problem. So go to the next question. So this is also similar to previous problem. So life assurance, they are asking us to prepare valuation balance sheet and profit distribution. Okay, first one is balance of life assurance fund, opening balance 167.15 and interim bonus paid 25 lakhs. Balance of revenue account for the year ended 31st March is 2014 is 240. Okay, net liability as per valuer certificate on 31/3/2014 is 214 is 165. Company declares reversionary bonus. What is reversionary bonus? Company declares reversionary bonus. Reversionary bonus means, normally what is bonus? It is an expense or income to the company. It is an expense to the company and income to the policy holders. We are going to pay something to the policy holder, right? That is bonus. But reversionary bonus means we will not pay immediately. That is an income for the policy holder and expenses to the company, but that we will not pay immediately to the policy holder. What we will do during the maturity of the policy, policy maturity will be maybe after 5 years or 10 years, depends on the policy contract, depends on the contract of the policy. But this bonus is not paid immediately. It will be paid when the policy is redeemed, when the policy is matured. During that time it will be paid. Along with the policy amount, this bonus is paid. That is reversionary bonus. Okay, meaning there is a liability for the company that we have to settle this bonus along with the maturity amount during the policy maturity. Okay, that is the meaning of reversionary bonus. Reversionary bonus means bonus which is not payable now but which is paid along with the maturity amount during the policy maturity time. Okay, the company declares reversionary bonus of rupees 185 per thousand. We will understand what is that 185 per thousand, and gave the policyholder an option to take bonus in cash 105 per thousand. Total business conducted by the company was 600 lakh. The company issued profit policy only. 3/5 of the policyholder in value opted for cash bonus. What they are trying to say? Normally bonus will be calculated in many manner. One of the manner is based on the business. For example, this company conducted this got a business of 600 lakhs. 600 lakhs business they got it. What they are trying to say is reversionary bonus they are paying 185 per thousand. Meaning, if the company got 1000 rupees business, we will pay 185 rupees bonus. If the company has got 1000 rupees business, we will pay 185 rupees as a bonus, reversionary bonus. And what about cash bonus? If the company got a 1000 rupees business, we will pay bonus in cash 105. Okay, 105 rupees per thousand. What is the thing? 3/5 of the policyholder in value opted for cash bonus. So out of the total policyholder, 3/5 of the policyholder opted for cash bonus. Balance 2/5 is for reversionary bonus. We will calculate what it is. But before that, we have to calculate valuation of balance sheet. Surplus or loss we have to calculate. Then net profit for the year we have to calculate. Then only this reversionary bonus and other things we have to calculate. Okay, we will work out the problem now. So valuation balance sheet. Refer the question. Life assurance fund opening balance how much? 1/4/2013. My opening balance is 167.15. Then what about closing balance? We are in the year of 31/3/2014. We are in the year of 31/3/2015. Opening balance is given. Closing balance is also given. Just go through balance of revenue account for the year ended 31/3/2014. That is the closing balance. That is your life assurance fund. Life assurance fund is 240 lakhs. Life assurance fund is 240 lakhs. Net liability is 165 lakhs. Net liability is 165 lakhs is given in the question. So difference surplus. Difference is my surplus. That is 75 lakhs. So 240 minus 165, difference is my surplus. That is my profit, 240. So I have to identify the profit and net profit for the overall valuation period. So profit as per valuation balance sheet is 75 lakhs. Profit as per valuation balance sheet is 75 lakhs I arrived. Plus any interim bonus is paid. Plus any interim bonus is already paid. 25 lakhs is given in the question. So 75 plus 25 is my total profit. That is 100 lakhs. Interim bonus means from profit I already paid 25 lakhs. So my 75 lakhs is arrived as per valuation balance sheet. From profit which I already paid as a bonus is 25 lakhs. So 75 plus 25 equal to 100. This is my total profit. This is my total profit as per rules and regulation. As per rules and regulation, what is appropriation? How to appropriate this 100 lakhs? 95% is for policyholder, 5% is for shareholder. So 100 into 95%, 95 lakhs. 100 into 5%, 5 lakhs. That is appropriation available to profit available for distribution to policyholder is 95 lakhs. Available to him is 5 lakhs. Okay. Now we have to identify bonus amount. How to calculate bonus amount? We will identify. So I will be calculating this bonus portion also. Even you can expect 1 or 2 marks, 1 mark problem also from this. So bonus payable in cash. Bonus payable in cash. As per question, 350 is opted for payable in cash, correct? What is the total business? What is the total business? And how much is paid actually? For every 1,000 rupees of business conducted during the year, they will pay 105. Okay, 105 into 1000. For every 1,000 rupees of business, they are going to pay 105 rupees. That is the condition. For every 1,000 rupees of business, they are going to pay 105 rupees as a bonus. This terms is agreed by 3/5. This terms is agreed by 3/5. Balance 2/5 is for reversionary bonus. 3/5 is okay with this terms. Into what is the total business conducted? Total business conducted is how much? 6 crore. 6 crore is my total business. For 1,000 rupees business, 105 means for 1,000 rupees business, they are ready to pay 105 rupees. For 1,000 rupees business, they are ready to pay 105 rupees. Then what about 6 crore business? If they do 6 crore business, how much they are eligible? That is the question. Okay. Then into 3/5. Then into 3/5 means out of 5 members, 3 is opted for. Out of total policy holders, 60%, 3/5 means 60% is opted for this cash bonus. You will get 37 lakhs 8,000. 37 lakhs 80,000. This is bonus payable in cash. Then reversionary bonus. This is 185 rupees per 1,000. If they got a business of 1,000 rupees, they will pay reversionary bonus 185 rupees. Meaning reversionary bonus means it is not paid presently, it will be paid during the maturity of policy. Along with the maturity of the policy, this amount will be paid. 185 divided by 1,000. Meaning if they do business for 1,000, they will get 185 rupees as a bonus. Then what about 6 crore business? 6 crore. How much they will get? 185 rupees. For 1,185 means for 6 crore how much they will get? Into 2/5. Because 2/5 only opted for this. 250 only opted for this. So 44 lakhs 40,000. 44 lakhs 40,000. This is reversionary bonus. This is bonus payable in cash. Okay. So this is the workings. We'll move to the next problem. Okay. So the next topic is explanation of special terms peculiar to insurance business related to revenue account, P&L balance sheet, your financial statement, P&L balance sheet we will discuss later. I will complete the rest of the